Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is Deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On the show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions to smaller deals that you can do even without significant capital. My name is Kupfer, and I've been supporting deal-driven growth for businesses for 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest Podcast. Let's get started. Welcome, DealQuest listeners. This is a solocast that we're going to be talking about the outlook on 2021 M&A deals. So we are less than 2 months into 2021, and it's really interesting. I often look at the outlook that, at the end of the prior year in terms of what people are seeing in terms of deals. I think I did a recap last year. 19 coming into 20. Don't think I did one this year. And it's always easy to get information on M&A deals as opposed to other types of deals. But often, if there are a lot of M&A deals going on or fewer M&A deals, other types of deals track along with them, although that's not, always definitely in lockstep. But it'll give you an idea of the market. And it's been really interesting as I've looked into it. It's sort of confirmed my experience in the industries that we work in. It's amazing how many different publications, experts, things like that are predicting a good year, or a very robust year in 2021 for M&A deals. So far, the statistics have proven it out. And, everything from tech. You look at, there's some articles and things like Computer World. There's insurance industry publications talking about how insurance deals are going to be robust. There are publications in pharma talking about how pharma deals are going to be robust. Biotech, logistics, gaming. I mean, you name it, financial services, which I've seen directly, along with tech, we've done a lot of. So why is it going to be so robust? We're in a pandemic. We have challenges in the economy. There's other challenges in society, right, in terms of political splits and things like that. You would think that some of this disruption, and certainly, things like unemployment, there are people suffering economically. You would think that maybe some of those factors would drag on deals, right? It would be logical to think that might be the case. But let's really examine what's going on in this time in the economy overall and why these predictions on deals, I think, are probably going to be pretty accurate and so far have proven out to be in 2021. Well, let's look at a few things. First of all, the one logical thing that people might think is, hey, one of the reasons why deals are going to be strong in 2021 is that we have a more positive outlook in terms of seeing our way maybe towards the end of or getting to a critical, mass of getting past the worst of this pandemic between the vaccines and things like that. So it's sort of natural to think the economy is going to be able to open up more, and that's what's really triggering it. And frankly, I'm not saying that doesn't play a role, but what belies that being the major cause of it is that the second half of 2020 was unbelievably strong in terms of deals, and the second half of 2020 was major COVID period, right? I mean, yes, we had a situation where in March and April, those were tougher times, in May, and then we had a period where things improved in terms of the disease, the pandemic, and company, more businesses were able to open, but then they got closed down again, right? In a lot of places, certainly in the big cities. But still 2020 remains strong. So, it's not just the contrast between what's expected later. And that's also belied by the fact that deals are strong in across various industries in the beginning of the year of 2021. And we're, not out of the woods yet in terms of various of these things. So if that's not the only reason, and certainly not the major factor, then then what are some of the other factors? Well, let's just talk about this economy, right? You have heard, even potentially from me and other content I put out, but certainly from others, this concept of this K economy. And the K economy says, hey, we have the upstroke of the K and the downstroke of the K, and we have a weird dichotomy in this economy where there are certainly businesses that are suffering, right? They're on that downstroke. They're in restaurants, they're in retail, they're in all of the things where we see not only people losing jobs, but businesses closing down, and or even if they're not closing down, if they have capital, if they're bigger chains, whatever, they are suffering. So you'd think maybe that's an impediment to deals. Then, however, you have the upstroke on the K. You have industries where, not only have they been less affected by the pandemic and the economic impact of that and related issues, but they've actually grown and benefited from it, or they've at least been unaffected, and certain industries have grown and benefited from it. Financial services is certainly an area that I do a lot of work in, and see that. Tech is an area we do a bunch of work in, and we see that. Certainly logistics and things like that. Where those things have become more important, and valuations have gone up, and companies have continued to be able to increase business and raise capital, et cetera. Those businesses have been robust. But here's the thing about it that's interesting for deals. You really have this dichotomy, almost these two extremes. And the two extremes are actually both conditions that create deals. See, when things are doing fine and they're not, booming and they're not busting, frankly, that's a time when a lot of businesses are sort of content. There's not a lot of threats involved. There's not, huge opportunities on the upside. And a lot of times things sort of go along, right? And there may be less capital available, things like that. Well, when you have a boom economy, there is major amounts of capital available. I think I read there's something like 61 trillion. It might have been a marketplace article. Something like 61 trillion in private equity money that's sitting on the sidelines but ready to be invested. There's an unbelievable amount of capital still out in the market, and because financial services and things of that nature have done well, the stock market is, after a blip in March, April of last year, has been strong. Investment capital continues to be available. Well, that's a significant factor to fund deals on the upside and even, deal with increasing valuations there. So that's the one side. Well, a down economy, right, where people are really struggling is also at an extreme, is also a motivator for deals, because companies need to figure out how to survive, how to pivot, and maybe they combine, maybe they get rolled up, maybe they get bought up, on the cheap for lower valuations, just to be able to survive, or to be bailed out, kind of. So because you have this very divided, distinctive dichotomy in the in this crazy economy, both of those lend themselves to more deals. And then with the capital available and the need to pivot, people are looking at relooking at business models. So some companies are saying, okay, wait a second, in this new changing economy, where can we supplement, all right, what we're providing for clients? Where can we bring more value? Where can we buy companies and do deals that are in adjacent maybe industries, right? Because we need to alter our business model because of changing conditions. So that has people looking for for deals as well. So it's an interesting time. So what does that mean for you and I? What does that mean for? a lot of these trends and statistics are with bigger deals, bigger companies. But you know what? Often those kind of trends come down market, even if it's whether it's companies, just smaller deals in general, or it's very often, especially for some of those last reasons I talked about, bigger companies are buying smaller companies. So smaller companies may be doing fewer acquisitions as on the buyer's side, but they become sellers, right? And and there's an opportunity there. So if you're running a small and medium-sized company, and you do the kind of things that make you attractive to potential buyers, this is actually a good time for you. And we can, I've done other podcasts, and we've talked during various interviews about, what makes you attractive to a buyer. But, very quickly, I mean, obviously, if you've got a brand, if you've got a company that is running, has true enterprise value, is running independent from you as your services as an owner, has good systems in place, good team in place, shows growth over time. There's a lot of other things involved, good management. Then you could set yourself up to be an attractive target for companies. And with the amount of capital that's available for them, the fact that they can finance those acquisitions, there are ways where you can, take significant money off the table, and then have additional money on the back end. And it might be a situation in which you are going to cycle out and retire, or it could be a situation where you could stay on and be employed, and even continue to run that division of that company, depending upon who the buyer is, what the capacity is, what they're looking for, whether your expertise really is important, and also your personal, goals and desires. So I think the other thing is it's always a good idea to, even if you're running a smaller or medium-sized company, to follow what the trends are and what the big boys and girls are looking at, right? Because that can give you clues as to where there's value for you. When companies are looking for adjacent capacities, that shows you, where they think there's value, where they think there's going to be growth in a particular area. So, so that may provide you with an opportunity to say, there may be an aspect of that area. If they see that industry or that geography or that, whatever it might be, that particular niche, that technology, as a growth area, that could be a good indicator to you that there might be other opportunities there for you. And it may not be in terms of deals. It actually just may be in terms of organic business growth, to say, hey, that's an area I can focus on. Or maybe, it affects what kind of R&D or products and services you develop, because it gives you an idea of what, opportunities they see. So, I always think it's helpful to follow the trends. I mean, it's easy enough these days to look online. Like I said, I mean, there's all kinds of articles in various industries. If you're in the pharma industry, the insurance industry, the tech, industry, the financial services industry, logistics, whatever, look around, Google, see what deals are happening. See why these companies are doing the deals. What strategic advantages are they looking to get by doing those deals? And how can that inform what you're doing at your level in your business, at this time? Now, listen, with any kind of prediction, right? I mean, predictions could be as wrong as they're right. Nobody's got a crystal ball. Certainly, nobody knows what's going to happen. All these black swan events, etc. So, you always have to take that with a grain of salt. The experts are not always right, but I will tell you that the facts so far in 2021 are bearing out what many of the publications and experts and industry folks said in some of these articles in late 2020 and coming into early 2021 here. So far, so good. There are factors that seem to indicate, that there'll be opportunities coming down the line.
Let's take a break from the show for a minute so I can invite you to a new way to determine your deal readiness. I created a fast and easy assessment that will determine exactly how deal ready you are. Once you complete the assessment, I use your responses to identify the obstacles that are holding you back from being a deal-driven growth genius. It's as easy as heading to CoreyKupfer.com/assessment. That's CoreyKupfer.com/assessment and filling out a few multiple choice questions. I'll be checking in after the episode to see what your results are. Now back to the show.
As business owners and entrepreneurs, the best we can do is play the probabilities, and then just really do the best we can to stay awake and alert to see if there are changing circumstances that might impact our strategies. Listen, listen. There's also another factor here that I'm hoping you folks as entrepreneurs and business executives and leaders in companies are taking into account, and that is that it's easy with all these challenges, whether it's pandemic, whether it's the disruption in race relations and politics and division in this country, could easily get you into a negative frame of mind, and being negative on and sort of extrapolating that out to what the opportunities and risks are in business. And while an objective view of those factors is important, it's easy with the constant between media and social media and whatever to focus on that. And there are and listen, trust me, I'm aware of that kind of stuff. I pay attention to it. There's certain areas in which I particularly choose to have impact on particular social issues and political issues, things like that. But I try to have that be only one of the pieces of information that informs my business strategy decisions, because there's always things that are countercyclical. There's things that no matter how much drama there is out there, there's in fact, there always is business opportunity. The question is, are you in a position to take advantage of it, to see it, to figure out where it's going, et cetera? I think I am a little more than cautiously optimistic about 2021 for a lot of it. So you can take that with a grain of salt, because I happen to be operating in areas that are on that upside of the K curve. We had a very strong 2020. And obviously, if you're in sectors that are more struggling, it's more challenging to see that. But again, there's still even opportunities there. I guess I'll conclude by saying that it was, I knew that there were strong areas on that upstroke of the K. My research in anticipation of this solocast actually showed me that at least, in terms of the press and more the experts in the industry, insiders, that upside on the K stroke is across some more broader industries than I realized. And most of them make sense. They're logical, right? And think about it: logistics, insurance, financial services. But it does seem to be more widespread. And listen, how that is going to end up coming down to the economy as a whole and affecting smaller businesses and affecting unemployment rates, that really, is to be seen. But I am reasonably confident that on this trajectory, that 2021 will be in fact, on this trajectory, I'm very confident. I'm reasonably confident, only because something unexpected could come up, that, this is going to be another very strong year coming after a very strong second half of last year. And in fact, first month and a half, 2 months of the year, and then especially the second half of last year in the M&A market. It's interesting times, and there's a lot of dichotomies out there, and you could have your judgments on them, but they are what they are, and this is one of them. So with that, folks, I'm going to leave you for this solocast, and hope you join me next week for my next guest, and look out for an upcoming solocast in a few weeks. All right, take care, everybody. Thanks for listening.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. I want to invite you to a unique way to tap into the wisdom and experience of the DealQuest community. Join the DealQuest Deal Den Zoom calls, a free monthly 90-minute mastermind. In the mastermind, we address all the challenges you may be facing and help support you with the opportunities that may arise in terms of deal-driven growth. You will get input not only from me, but all the members on the call will collaborate and serve each other in a mastermind format. To sign up for the free mastermind, go to www.corykupfer.com/dealden. That's corykupfer.com/dealden. I'll see you there. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.